Hello my friends, welcome to Apex Trades, hope you're all well. Bit more of a long form video I think on this one. I want to go over just some analysis I've been doing specifically on Bitcoin and why things are starting to shape up quite nicely actually. If you're a fan of the channel, you'll know that I quite like to use structure, at least in price action, and like to kind of get some sense of, you know, taking historical data and then figuring out where we think things are going to go. So just starting off nice and basic with our Elliott wave and where we think. So we're currently on a 3-day chart. We're going to go, let's put the magnet tool on actually. We're going to look at, so this would be, we're starting at the top, so the top of the cycle, and we're going to go down. So you could say, well, either this would be the end of one because it's a sharp move down, but because it was more of a liquidity grab, I'm probably going to suggest that this would be your first wave. That would be clearly 2. We have this 3rd. Now I'm making the case why I think that I don't think this is 4. So usually you could say, okay, well that would be 4, this would be 5, and then we're on a new cycle. I don't think that's the case. I actually think 4 is here. 4 typically is a lot longer and slower to react and much more wavier than you kind of wanted to. And then what you want to kind of look and see is, do you have your, if this would be like a primary version, so you have different waves, and it's all to do with this kind of fractal pattern, so patterns within patterns. So within your first wave, you always want to see 5 waves, or at least 5 waves. Within your corrective wave, which is 1 to 2, you want to see 3. Your impulsive wave for your 3rd, you want to see another 5, and then your 3 to 4, which would be another corrective, you want to see 3, and then another 5 waves on your final 5th wave. So we're not going to kind of draw it too much, but we're just going to eyeball it. So you could say maybe this would be 1, 2 would be a correction here, this would be 3, long one down here, 4, and then 5 here. So you've got your 5 waves. Now usually what you'd like to say is your 3rd wave can't be the shortest. Well, I think in this one the 5th wave is probably the shortest in this one, so we're not too bad with that. Then you want to see 3 waves within your corrective wave, so 1 to 2. So you could say like this, 1, 2, 3, nice and obvious. And then you'd do another 5 waves, so you could say 1, 2, impulsive wave 3, here to 4, and then here to 5. Sorry about that wavy mess, but it does play up. And then let me just make this a bit more clearer. For your 4th wave here, you want an ABC. Now the thing with ABCs is you can get 2 types of corrections. You can get flat corrections, which are equilateral, so your A and your C basically match. Sometimes you want to see your C just pass it, sometimes it doesn't, as long as it's kind of there or thereabouts. It's a flat correction. And you can get zigzag corrections, which are more favored towards the idea of the trend. So let's just look at this one. So you could say, well, if this was your start of your A wave, it's up here, and then you could say your B wave would be down here, and then your C wave could be here. So that, when I say flat, you know, this kind of equal flat correction, yeah. So taking that on board, it's like, well, this would be effectively A. So we're gonna get rid of this because I don't want it to mess up the chart. So we're gonna say, okay, well, sorry guys, just a quick pause. If you were enjoying the video, I just want to talk a little bit about the Apex Trades server. So the purpose, so this was built specifically for education and development. However, I do put myself out there by showing and demonstrating my own trades, how I trade, the levels that I like to get in and get out, and this is kind of backed up by the videos that I tend to put out there. By subscribing, what would you get? Well, obviously you'll be able to follow along with me if that's so what you wish to do. If you want to understand how to trade better, if you want to learn how to trade, a shed load of, nearly said something different, but a shed loads of educational content. I do one-on-one sessions with individuals for Patreon traders. These are people who want to find out where they're kind of maybe going wrong, or maybe get some deeper level of understanding as a one-to-one basis rather than in a crowd. Oftentimes I've found these very, very useful. We do some daily and weekly technical analysis, specifically on BTC. We have lots of different platforms throughout the team. So we've got HighBlock and Bookmap. Bookmap is a tool you'll have seen often, which shows where the live orders flow and are demonstrated within server. You can see these actually in these channels here. So we'll have, let's see, we have like Bookmap. So we'll be showing on a regular basis where the key levels are residing and where we're kind of looking at. And then we have HighBlock, which is a fantastic tool. HighBlock actually shows you where big liquidation events are going to occur. And good friend of mine, Moonrise, who is one of our moderators, kind of shows and implements that on the daily. So again, if it's something you want to just fantastic community, get involved with, speak to people all in a similar kind of framework and mentality of yourself, all trying to get better at trading, then I suggest you consider maybe coming over and joining our server. Link is in the description, and I will hopefully see you guys there. If we take our magnet tool back on, and we're going to say that this is A, okay? So we know, matter of fact, we're going to have, this is a liquidity zone right here. This is where there's going to be an awful lot of liquidity, simply because it's the last place where we went up. I know we had this downward move, but realistically the last place we kind of came up when we had the huge drop way back in like May 2022, June, something like that. Oftentimes when you see the peak of a move, then it breaks down is essentially where liquidity is. Like liquidity was here, liquidity would have been here, and obviously liquidity is there. You'll have liquidity here. You'll have liquidity at all different zones. It's usually where price hasn't been for a while, and there's a lot of confluence around a specific level. So just keep that in mind. So the other thing I just wanted to map really quickly was, looking at this monthly, we've got a new monthly level, which you can see is being really well respected. So again, I'm just looking at here, that's a monthly. If we go to the weekly time frame, you can see also here is a weekly. So we've got a couple of stage gates, which I would class as high key time frames. So you've got your monthly, your weekly, and you've got a big liquidity zone right at the last peak. So looking like, how can we favor which way this is going to go? Well, I believe we're going to go a little bit further up. We've got to take note of the recent bull flag that's building, but some interesting stats around the bull flag. To do this, we'll do maybe 4 hour. I might go to the 2 hour actually. Let's look at this. So let me do the 2 hour just for this, because I think it illustrates it better. So from the last peak, one thing that we are seeing, and I think you'd agree, is a reduction in volume. Yeah, that volume is dropping ever since this move. Now, one of the things I've noticed is if you take this pattern here to here, you can see we quite well respect it, and we had this liquidity grab with this big candle here. We came back up, retested the top of the channel, and then respected it here. So we're in a bull flag, right? But what you would say is, when you're in a bull flag, you want to see volume start to really drop, because what happens then is, when you start to see reduction in volume, that would also show, if you have things like your Bollinger Bands, a real squeeze on your Bollinger Bands, and when you get a squeeze, normally follows with big activity to the upside, and it would ring true, right? So what I think can happen and play out is we get a huge spike, but a liquidity grab, and I don't believe we go any higher than here. I believe this would be the point at which we really start to see a big breakdown, only because, again, on the wider angle, on the wider picture, I still think it's nothing more than a correction. And I know that sounds very like, well, why can't I jump on this side of this idea that this is a bull market? Well, really, I just can't. It's just, there's the economic data. We're seeing company earnings slashed, people getting laid off, potential recession, all of this kind of stuff is happening. How can we really be in a bull run? So I find that hard to believe. But what you can say, matter of fact, is, you know, we are still respecting structure. You know, we've got this 5 waves down, and this would be a nice ABC correction. A, B, C, right, coming out here. And if you take, even if we just take this alone, so let's go like this. I'm just going to zoom in a little bit so it's nice and clear. If we take our Fibonacci extension and we go from the swing low, swing high, back to the swing low, you can also see the 1.272 right on that same point of where the liquidity is, just above. So when you're thinking of, if you know too much about liquidity grabs, you tend to see, you know, what we're trying to do is just break above, hit the liquidity, slightly above the liquidity, and then we can come back down. You normally see that with some, you know, a lot of aggression. So that would theoretically create that nice equilateral ABC correction, a flat ABC correction, which then you could say, okay, well, structurally it's finished and finalized. It's ABC. It's broken slightly above, because it would do if it just peaked above here, right at that $25,000, $25,200 to be exact, and that would be, you know, something nice to play out. So, but that's just one idea. The other thing we've got to, I guess, pay respect to is the super trend. Now, the super trend is not really one I trade on. I don't trade it specifically. I don't utilize it in any of my trading, but I think, you know, it is one that, if I just look. Okay, team, if you are looking for a central exchange to use, maybe you've getting a bit fed up with your own, or you want to find a new one, maybe consider using ByBit. It's the platform that I use myself, also many of the participants in our server in Apex Trades, and it's one that I'm pretty much familiar with. If you sign up with me, link is in the description, you will receive $50 as a welcome bonus, which is always nice. Why would you use ByBit? Well, number one, obviously in a world where exchanges seem to be falling down by the bit, one of the things I liked is they quite quickly jumped on the ability to prove their reserves, which is essentially a way in which they look at what's backing everything within their portfolio. So if you look at their portfolio, this is the Nansen dashboard. You can see majority of their tokens. So essentially you've got like 50% in USDT, we've got just over 20% in BTC, we've got a small percentage of 10% of their own native token, which is BIT, which is a utility token, and then we have around 10% in ETH. So actually, if you think about it, you've got 50, 60, 70, nearly 80% backed by really solid tokens, and an additional 4% in USDT. So I think if you're looking for a platform that's well backed, isn't just gonna, you know, buckle under the pressure of what something like FTX did as an example, then you should consider ByBit as a way to kind of get that through. Now, the other thing I like, I mean, in terms of platform functionality, it links nicely to TradingView, so it has all of the ability to map out, use the same kinds of indicators that you see on TradingView. You can set alerts, which allow, if an alert comes through, to be registered on ByBit if you have certain levels or things like that you want to be able to put forward. It also allows hedge mode, so it means you can do a short and a long position at the same time. Why would you want to do that? Well, maybe if you're at a position where you want to lock in a specific value, maybe it's in a loss position and you want to be able to work that off. Hedge mode allows you to kind of, you know, counteract that by locking in that loss for a temporary amount of time until you find a new level that you want to reverse and turn. Of course, none of this is financial advice, but we do talk a little bit about how to manage trades in the server. So I would recommend ByBit. Again, it's one that majority of us use, and I like to see the confidence in a platform that comes out and explains exactly what they're going to do and demonstrates that transparency on their native token. So as I say, if you want to use my link, it's in the description. Helps you out, helps the channel out, and helps me out too, so really appreciate it. Super trend. And we go to the weekly. I think one interesting thing about this super trend is each time it's, you know, changed its narrative. So here, you know, it went from bearish to bullish, and then we had this huge move to the upside. Then it, at this point it went bearish and moved to the downside, and then it picked it here at this point, and it went bullish, it went to the upside, so on and so forth. So you can see each time it changes, usually it's the start of what appears to be quite an interesting cycle. So literally this week was this candle here, which closed yesterday, Sunday, was where we flipped bullish. So that's something to be respected, even though structurally it looks like we can kind of push up a bit. Now that's not to say that, this is a decade's worth of data, right? So you can go back and you can test this a number of times, but still, we've still got some reasons to believe why it's an indicator at the end of the day. It's not reality. It's just lagging data that gives you an interpretation of, where price can go. But you also can't ignore it, because it's interesting nonetheless that, these kind of things do happen. So I just think that's something interesting to bring, that this super trend is, a long-term cycle. I'm looking at the weekly, and you can see literally within last week we flipped bullish on that. So just something to keep in mind. Okay, so interestingly enough, so if I go now to the 4 hour, as I say, we have got this this bull flag building, but what I'm less interested in is the fact that we are starting. So more interested is we're not really dropping volume. If you look, that volume is still high. What you normally want to see is as the bull flag is dropping, like I said before, you start to see a reduction in volume. So it's why I think we're probably expecting a fake out, right? Push to the upside, grab liquidity, push to the downside. If I saw that this volume is really, really low, like starting to really, really taper off, I would start to believe that potentially we've got some highly likely chance of moving to the upside. So it's I don't know, something to be mindful of. So I would say like this, I would be looking for, number one, do we break? I would look at the monthly level here as a nice entry, right? Because we've broken it once, we've broken it twice. Really, really low leverage, but looking for nice DCA patterns, right? So I'd look for the monthly high term time frame. That's at the 23,290, which we've already broke. But you could have a small 10, maybe 10%, 5x leverage, maybe 10x leverage. To be fair, you would probably, if depending on how much allocation you allowed, you could quite easily DCA to these levels. And the idea that each one of these may not get triggered, or at least maybe one of them, maybe two, and maybe three. If we do push to the upside, the next clear zone is this weekly, and again it coincides with a nice point on the chart here, which again you'll find a lot of liquidity around there and a strong potential for a reversal, and then finally this big liquidity zone up here. So if it does want to keep pushing up, which certainly can do, they would be zones I'd be targeting for a possible short position. So I'd have a short position here. That's a little bit long. Don't know why that done that. And I'll show you in a second where I'd be targeting for a take profit. But you'd have DCA, and again you'd want to average these in, scale into them, so they are all part of the same trade. But as I say, something to keep your mind abreast of. Now, where would we target from a short position? Well, there's a couple of interesting areas that I want to focus in on. So I'll go back to the 2 hour. Okay, so there's a really well respected zone, which I think is difficult to ignore. And we'll bring that in. Actually, no, we'll just draw it out. So you can see like this. We have a nice level of respected resistance here, which, well, was support, but now from the breakout will act as resistance. What we also have in this area, if we just take that off and we look at the weekly pivot points for the naked chart, you can see if we bring this in, right now you can see again, so each one of these profiles is showing you the week's worth of data, and then where the value area high, the value area low, and the point of control. So again, it's in a really nice area. That's just 21,000 thereabouts. We've got this kind of zone here, which is at the 21,500 level. And then obviously if we take this off, what else we can see around this area is if we take our Elliott wave and go from here up to here, right in that same area we have the golden pocket, which again gives a nice confluence for a potential move to the downside. So the idea would be, you know, if we do break up, whether we take some more liquidity at the monthly, if we go a little bit higher, I would still be looking at this area of a nice take profit, or at least at your first level of your take profit. So just keep that in mind. Now, the other thing that I think is worth mentioning is if we go to the Atlas Stochastic, one thing that we've looked at before, let me just see where that would be. Sorry guys. Here we go. Now if we go to the daily on the Atlas, every time we've hit the daily, you know, we've seen a really large sell-off. So up here we've seen a sell-off when this came into play. Here we've seen another big sell-off right the way down. Each time we hit the height of these Atlas Stochastics, we tend to see a fairly decent sell-off. Now this distance is, again, well, you could map that out quite actually, couldn't you? You could say, well, how long is that? So let's see, price range. This one was from the time at the bottom. Let me just take the magnet tool off. I hate the magnet tool sometimes when you're trying to do this. But that was over 2,100 data points. And then the next time we looked at that as well, if you take the same one around this Atlas Stochastic, when they hit the top, was significant. Nearly, well, 5,500. So as I say, we're in quite bearish territory right now. Everything is screaming overbought. We are at the point of in my opinion, an ABC correction that demonstrates and shows actually that it is a flat correction. So I think that's something to be mindful of, which we've got to take care of. The other thing as well, in terms of a fair value gap, which I think is really interesting, at least on this daily, we have, you know, a closing of this area here. This whole area, if I take that back, is a fair value gap. So again, you know, weekly and the liquidity zone would close at least the 50% of that, even if you bring that down to the 4 hour. In terms of you know, you've also got one here. Again, I'll just map that out a little bit so it's a bit clearer. You can see from that point there down to that point is exactly where we've got another 4 hour fair value gap. So you've got a number of good reasons why this would be the area where we'd want to rest a little bit, take our potential, and then move to the upside. Back down to the downside. Okay, and then finally, let's just finish this off. What else have we got? So yeah, I think that's pretty much it, really. It's going to be interesting to see what happens, but I could make a case, as I say, that we push up. I don't anticipate us really going any higher than this 25,200. I think that would be the absolute top for me. I know this has happened on a number of times. However, from a structural perspective, even if you take this right the way back from the earlier point, there's a lot of reasons why this could be the kind of point to change. Now, if we just to kind of coincide with some other information, if we take Bookmap and look at what Bookmap has for this kind of information, does it give us any confluence? Well, if you look, I mean, we've got some really big levels. We've got 23,800. We've got over 1,000 Bitcoin at 23,800. We've got 1,280 at 24k. Again, another 1,000 at 24,500. Another 1,000 Bitcoin at 24,800, and then another 1,500 Bitcoin at 25k. And again, that's all of these key zones are where there's either liquidity, monthly high term time frame, weekly high term time frame, huge point of control across the whole map. So a lot of this makes sense as to why, you know, that would be a kind of a key area to look at. Just finally, one last thing that I just want to cover, at least on the chart, is if we take the total volume profile to here. Again, you can see right now where we're currently at, and it's why we're getting a lot of stickiness from a value area high perspective, is right at the top of that whole area, and that covers the whole, you know, distance of well, way back since June. We can see, so there's a lot of reasons why. Number one, we're getting sticky here. Number two, why we can still push up a little bit to the upside, but why I believe eventually we are kind of ready to start moving back to the downside. So let's see what the next couple of weeks brings, and anything else I will update and kind of give you it raw and just give you what I think as I'm thinking it. All right, thank you very much, and I will see you guys later. Bye for now.